Are order blocks and breaker blocks a scam? Well, we have to define scam. I'm going to define scam as in it doesn't work consistently and or it's not useful to traders, because then if it's being taught to traders as being useful and it's not, that's a scam. So I don't inherently believe that order blocks are a scam. I do inherently believe they're not useful though. And I'm going to go through this video and first explain exactly what they are to prove to you I know exactly what they are and I have a very robust understanding of exactly what an order block and breaker block are, how to spot them, how to use them. And look, again, I've made a beautiful guide. Once again, your online gurus are scared to make these because it takes them too much time and they don't think it's valuable. I hope you guys find it valuable because we have this beautiful, I think we're at 12-page document fully encapsulating what order blocks are. So that's what we're going to start with. We're going to describe what are order blocks, how to use them, how to execute when understanding where they are, the bias that goes into finding them, blase. I think you understand the point here. Throughout this video, I'll be relating them to other concepts that I use personally. I don't personally use order blocks in my day-to-day trading, but sometimes I will. Throughout this, you're going to kind of get an idea of exactly what it means to find an order block, what it means to find a breaker, are they difficult, etc., etc. So without further ado, let's just hop right into it. If you guys appreciate me making these beautiful guides here that no other online guru is making right now, drop a like, drop a comment that you guys enjoy it, and I'll keep doing them. So let's just get started with what to expect in this video, right? Index. We're going to have supply and demand, what are order blocks, what makes an order block valid, how to spot it, valid order blocks, how to execute once found, avoid bid and asking invalid order blocks, and then choosing what time frame to look for to find them. And then after, we'll get to breaker blocks, which is simple, and then we'll get to tips on playing breaker blocks. Hope you're ready. First slide here, supply and demand. So at its core, with price action, supply and demand is just an area that typically emerges as a fresh, untouched zone of interest in the market. They have the potential to offer short-term liquidity, thereby temporarily influencing price actions. So this is all you really need to know, is that if we can find some point on the chart where supply and demand is going to be higher than it typically is, so there's more supply or more demand than normal, we know that there could be a short-term price fluctuation, which means opportunity. I'm sure that you guys were about to say that in your head, right? Opportunity is what annotates all models. Is there has to be an opportunity in what you're defining, and what we're defining today is supply. If there's a lot of supply or a lot of demand, we're finding opportunity in which we can make actionable insight to profit. On the other hand, resistance and support levels denote historical pivot levels in price action, having played significant roles in shaping previous market trends, outlining crucial price boundaries. So resistance and support are just areas where previously this price had bounced from it or had crashed from it. They've been used multiple times, and today we're talking about ones that haven't been used multiple times and or only once, right? So now how do we spot these supply and demand zones through order blocks? Well, first we have to define what is an order block. An order block serves as a supply and demand zone, visually delineating areas crucial for traders. They provide clear entry points and straightforward invalidation levels, making them indispensable in price action trading strategies. In essence, order blocks represent zones where price reflects significant interest. Evident in their name, a cluster of orders congregates within them. Liquidity is infused into these order blocks for future use, leading to typical sharp and decisive market reactions. So, this is what it is. An order block is a down or up candle near a key level that preceded an impulsive move up or down. A bullish order block and a bearish order block are the only two we'll be talking about. A bullish order block is a down candle near a support level that preceded an impulsive move up. And the opposite goes for a bearish order block, is an up candle near or at resistance that preceded an impulsive move down. And this is what it will look like, right? So you have this bullish structure that keeps taking its highs. Its lows are protected. If the lows are hit, we know there would be a market structure break, right? Because then the trend will be changing to the downside. If this happens, that last up candle, which would be in this zone, before the move down that ended up taking that level, is going to be where we know there's form supply and or defined by bearish order block as the definition. Let's continue. The bullish order block looks exactly the same, just different. If we know that the highs are protected in a trend and the lows keep breaking and we're in a downtrend, we have lower lows and we have lower highs. They're not breaking. If they do, boom, break, we know that that previous down candle in this now bullish move is going to be our formed supply. And this is where formed demand, this is actually incorrect, form demand, this is where we'll find our bullish order block. Now, what makes them valid? So we know that this is pretty ambiguous at this point. That's just the last down candle before an impulsive move up. That inevitably impulsive move up is defined by market structure break. Well, how do we know it's valid? So it should be located near high time frame support or a resistance level, at least the direction of that time frame. The order block must precede a break in market structure, so it must be before, right? Preceding is before. The imbalance preceded by the order block must be 2 times the order block's magnitude of reaction. We'll get into this. The order block must take out an opposing order block, and this increases the interest. So number 4, if we can take out an opposing order block, it's even better. How to spot order block. So if we're looking for bullish order blocks, you must ensure that the high time frame market structure, according to your time frame matrix, is bullish. Explained at the end of the document. 2, when looking for a bullish order block, start looking for areas of interest in your directional bias, support and resistance levels like we talked about before. Drill down your entry time frame and begin to look for order blocks around those levels. A bullish order block is defined by at least, right, the last down candle before the impulsive move up, and it has to fit the definition of once it meets the basic criteria, you validate it with the characteristics stated above. 1, 2, 3, and 4. Same thing for bearish order blocks. I don't think we have to reignite that. Now you get some visuals, and the rest may have been a little bit confusing. Most traders are visual learners to begin with, so let's get started. We can see here that we had a previous bearish trend. Lows are taken, highs stay intact. And we can see that it continues like this for a while. Now, the last down candle before the impulsive move up is here. Here's the last down candle, and we can see that this entire trend, the 2 candles that preceded or that were after this demand was formed, are double the size of the magnitude of this trend, right? This candle is about half size of this trend, and this candle engulfs the rest of it. So we know for a fact that there is going to be demand found at these lows as the last down candle before the market structure break. So if price revisits this, we have a good opportunity to know that price will have a reaction and continue in that direction. What makes this order block valid? It was the last down candle before the impulsive move up that broke structure. This is key, breaking structure. When we say impulsive move, we need to think that it has to break structure. It has to change the trend it's currently in. The rally or imbalance away from the order block is larger than the 2x the order block. This has tremendous interest. So if you take the candle size here, right, we can see that this is double, right? The interest outside of this after this order block is double the size of the order block itself. If the order block aligns with high interest level, we'll add more interest to it. So if this is at some high time frame PD rate, the order block forms within a bullish 4-hour gap. That came from all the way over here. Even better, always add more criteria and more confluences if you can. Now, if you understand what the order block is, how are we going to execute using them? Well, now that we found ourselves a proper order block, the next one is how do we execute? So here's the same time frame here as we just showed you before. A order block should contain a considerable number of orders waiting to be filled. If the order block is valid, then price shouldn't be able to go lower than the marked out zone. Therefore, here is one conservative way to play order blocks. And in this example, we have a bullish one, so we'll talk about bullish order blocks. Entry at the top of the order block here, as this will be the first set of orders that are engaged, and validation below the lowest price of the order block, target next swing highs or liquidity area above. And just like that, you'll assume that price may continue back. Retest, we assume that this low is protected, and we will stop out or take a loss on our position if it trades down here. Now, what do we must avoid, and what must we avoid when asking for invalid order blocks? Well, some of the main things is you could have marked out a valid order block. However, that doesn't guarantee that price will respect it. Of course, no strategy has a 100% strike rate, and order blocks are not an exception. General market conditions and previous price action are key to determine if we should be entering our trades on aggressive or conservative entries. For the most part, what I'm teaching you today, of course, order blocks, they of themselves are not a trading model that you should ever use. You shouldn't just trade based off of an order block alone. And this is where a lot of people have problems when trading is they find a concept, let's call it fair value gaps or order blocks. They find a concept and then they want to use it alone by itself. Like, oh, the fair value gap's getting tested, I should long it. Absolutely incorrect, and that's why you're unprofitable, is because you don't have a robust model around a trading concept such as order blocks, fair value gaps, PD arrays, Wyckoff, harmonics, whatever it may be. I don't care. It must be a robust and at a minimum 4 to 5 confluences to entry. So here's one confluence in this video. You must need 3, 4, 5, 6, 7, 8 others in order to have a robust model that would be profitable over time. Now, one of the highly recommended practices is to closely monitor the lower time frame price action as price nears our area of interest. If price demonstrates bullish price action patterns as it approaches a demand order block, the validity of the demand order block increases. Conversely, if bearish price action patterns emerge near a supply order block, it enhances the likelihood of the supply order block being valid. Detecting these patterns enables traders to anticipate favorable entries. So now what you're asking is probably, well, if there's bearish price action near a bullish order block, it's not as valid. And if there's bullish price action or a bearish order block is not as valid. Precisely. And that's why I think order blocks may not technically be a scam, are too ambiguous for the average trader to use for profit. That's why I think if you ever see someone trading order blocks, they have at least 3 to 4 other confluences. They're using fair value gaps at the same time because order blocks by themselves are too ambiguous. And we'll go into a chart after this to show you. If the order block fails at supply and demand block, that turns into a breaker block. The opposite of nature, we'll develop on those later. Breaker blocks are probably the most important part of this video, so we'll get into it quickly. What time frame should we look for order blocks? So, of course, technically there's no right or wrong way to mark out an order block, but here's a few tips. You want it as close to the market structure break level as possible. The stronger the move away from that level, the better the supply and the demand of the order block. How much time did price spend at that level? The less time spent at the level, the better, because we'll know that it's having a larger reaction because it's quicker. Quickness and speed and efficiency is a huge proponent to all of these trading concepts. Often you will likely get overlapping order blocks and breakers within the same time frame. How to trade overlapping order blocks. Low time frame order blocks, good for optimal entries with higher risk to reward. High time frame order blocks, good for setting stop losses for other orders, right? If we have a high time frame order block, it may be large, 200, 300, 400 points wide. We can't exactly have an optimal entry model based off of a stop that wide. So we can use those high time frame order blocks in order to, delineate some type of high time frame bias we may have. Next up, breaker blocks. Probably my favorite part of this because it's all I don't use order blocks themselves. I use breaker blocks more often than I ever use order blocks. And this is why I call order blocks typically a scam. I don't think they're a literal scam. They do have value, but most people aren't profitable with them. I think they're too ambiguous for most traders to even use. Easily put, breakers are a failed supply and demand order block that now act as a flipped level for traders. The most reliable breakers are the ones that offer little to no resistance when previously tested as supply and demand. If it previously was a valid order block, that automatically means the breaker is valid. But not all failed order blocks are reliable breakers. How can I find one? Up next, we define some criteria. So for bullish breakers, we find that preceding the supply order block is what needs to start. Price must blow through the supply order block, automatically invalidate. It must blow through it like this. So here's the order block. It must blow through it immediately. And if we get a retest, even better. The order block should offer little to no resistance. If a market structure break occurs after the order block was proven invalid, that turns the breaker into a high area of interest. So we have a market structure break here, but we also have one up here. You probably didn't even see that, did you? For bullish breakers, a new higher high is made after a previous MSB to the downside. This is optional, but it is one of the greatest probabilities enhancers for breakers. So breaker, all it is an order block that didn't work. Congratulations, that is it. Bearish breaker here, you can see that we have a downtrend, then we have a market structure shift. So the market's telling us it's likely to go to the upside. If the order block fails, we know that this is a breaker, and if price retests it, we have our secondary point of interest to then go short. So it quite literally tells you when the market is going to change direction, even if it failed the first time. Tips for playing breakers, anticipate them. Weak order blocks is a huge sign that breakers, once they are proven invalid, that you can then play, right? So a weak order block tends to offer solid breakers. If the order block is poor, if it gets traded through very fast, then the breaker will be pretty decent. So if the order block is invalid, look for the breaker. Same thing with fair value gaps. You look to play solid supply and demand order blocks. You expect weak supply and demand order blocks to fail. Add context to your chart. Is price within a range? Could this be a deviation? Is this a stop, hunt, or trap? This is where I tell you, add additional confluences. Just because I'm teaching you order blocks doesn't mean you're going to be profitable alone with these. This is a part of price action mastery that I'm teaching you guys, so you have all pieces, put them together, and now you have your entire subset of trade tools that you need to be profitable. What has been the behavior of the previous price action? Are traders being trapped constantly? And is the asset trending? Determine the strength of your breaker, assess price action and market conditions. Now, we'll quickly go into the chart to show you just how I believe unreliable order blocks are. So we'll take a few of these. We can see that we're in an uptrend right now. And this is NASDAQ right now. So this is up to NASDAQ. We can see the highs keep getting taken and the lows are staying intact. So a decent uptrend, the uptrend continues, and then we have these lows that get hit. So here's your market structure shift right here. Here's one of them, correct? So the market shifts to the downside as this low took this high, and this high right here, this 1 hour candle, would then be our up candle close before it changed structure, and this would be your order block. So we can see that this order block gets disrespected pretty darn fast, and this is why I don't like them, is because they are not consistent, especially not as consistent as we may say, fair value gaps, right? So this up candle before the one moved down really offered no strength to us. But if we look, as soon as it fails, it will turn into a breaker block. Price never closes below, and then price reaches new highs. Now, albeit not that high of highs, so it didn't continue all that far. But again, we can see if we go to the hourly time frame again, near this exact same level, we have another set of a move, right? If we remove all this, we can see that price was bullish before, the lows are protected, the highs are getting hit, and then eventually we have this. Price comes down, takes the low in a bullish trend. So here is your market structure break. Of course, this low took new highs. It should be protected and not get hit. If it does, it is a market structure shift, so it's anticipating the price should move to the downside here. Well, if price does not move to the downside here, what do we have? Well, we're going to see that in this channel, we're going to have, sorry, not this one, it's going to be the last, right? The last up candle in this price leg right here would then be your order block. You can't define it any other way. I mean, this is the last candle in the price leg. You can see it right here. Here's the last impulsive candle up before the mass move down into the market structure break, and then no respect. It doesn't continue the trend to the downside. It does fail and then turns into a breaker. And look at this. Price comes back and tests as a breaker, and the breaker barely works too. So I'm here to teach you exactly what order blocks and breakers are, but also that they're really not that good. As much as some people may swear by them, I think they're awful. I think they're too ambiguous, they're too difficult for people to spot, and most traders aren't able to use them consistently. We can take this, like, let's go to a random point in history. We'll go to 15 minute, and we'll just scroll back and we'll start looking, right? Let's just go right here. Okay, so here's the trend. We can obviously see that's bearish. The highs are protected. Doesn't look like any of them are hitting. The lows get hit, the lows get hit, the lows get hit. We have to wait until something in this trend changes, right? We can see that we start to get a little bit of pushback here. So these highs inevitably break these lows. If they hit, here's the market structure shift. So then we have the MSB here. Now the next thing for us to look for is, hey, was there an order block formed anywhere here? Let's move up one time frame. We'll go to the 1 hour and we'll see if we can find anything there. So 1 hour, we can see that we have what looks to be this last down candle before the inevitable move up. Here is going to be your order block. And let's go back to the 15-minute frame. Let's go back to where we were looking at price over here. And we can see this order block on the 1 hour time frame has a beautiful reaction where you could have taken, inevitably your long position into the swing highs, stops below the low, 4.25 risk reward, and boom. It never ended up coming to it. I'm going to assume most people trim before that. They have stops trailing, whatnot. So decent. You get a decent order block move here. And again, I'm not even here. My goal of this video isn't to tell you guys how good order blocks are. I'm actually here to show you like how actually poor I believe they are. So let's delete all this again and let's continue. We can see the downtrends continuing. Let's move right here. So here we have a continuous downtrend. Price is not breaking these lows, or price is breaking the lows and continually not breaking the highs. So we have this high here that gets broken. So that's an MSB. So this market structure shift here after price moves lower, right? We can see this price moves lower. We can even move this to the most relevant high. Price continues. Here is the MSB. Now, we have to find, well, where was the last down candle that inevitably helped us move higher? Well, if you go to the last down candle right here, we can just take this whole range. Boom, here's your order block. Price trades through it immediately, really no value. Does price ever come back into this? Boom, and here's the breaker. Price comes back into this. Breaker block, and then you have a decent reaction and it continues lower. But you can see how you gotta wait a while in between this. You gotta wait 2 days in between that breaker block to be used. And some people may argue, well, you're on too high of a time frame. Fair enough. Let's go to Friday's price action, right? So the market opened somewhere around here. And again, my goal of this video isn't to show you how good order blocks are. I'm here to show you how actually piss poor I believe they are. Pretty bad trend for the day. No market structure shift. Let's find a market structure shift here. Let's go to Thursday instead. So here's a low that gets taken, and then we have highs from the session. We can even take these highs here. These highs for the session, then we have these highs at these pivot lows, which get hit. So here's your market structure shift. A previous high that took a new low ended up getting hit. So it's up to us to figure out, is there some sort of order block here? Can we just go to the 15-minute time frame? Here's the last down candle, right? Until they move up. Here's your order block. Can we optimize it? Maybe we can go to the 5-minute. Maybe there's a better one. Here's another down candle. Here's another order block. Doesn't exactly get tested. And then you can see price comes back, tests this, moves up slightly, and then disrespects both of them. And then neither of them are used as breaker blocks after that. So again, order blocks, I believe, are a sham. They're too ambiguous. Like, the idea in what you'll learn from anyone online is it's the last down candle before the impulsive move, which typically doesn't work. I mean, trust me, I'm showing you in real time. You can even see this from London session overnight, 4:10 a.m. Like, here's a small move. Now, they would say that, hey, here's the impulsive move here. This is a slight order block that you could use, and then it moves price down. When in reality, if you go to the 15-minute, you can also see that this is just part of a larger fair value gap in the range. So order blocks, very difficult for the average trader to spot. I think not profitable in the long term. I think they help as long as you know how to spot them continually, but they're difficult to spot. It's not a normal concept for most people to spot. I mean, you can take something like this. Everyone knows how to find fair value gaps, and fair value gaps continually prove why they're so good. Tip into the fair value gap, tip into the fair value gap, and then move down. Then you can see this larger time frame for fair value gap here. I think this is a 1 hour. 1 hour fair value gap here, not so long into this zone, because once you get past the 50% point, you're in a premium. Like, this is so easy for us to spot. To short when you come to the 50% of the zone, and guess what? I mean, profitable there too. So I urge people, continually, if you're able to, use other PD arrays such as fair value gaps instead of order blocks. It's just continually better. Here's the last down candle here. You can see this. It doesn't even end up testing it for a breaker block. So are breaker blocks and order block scams? It's really up for you to determine it. Over my last 6 years of trading, 2.5 years of using order blocks, or at least knowing of them and searching for them in the market, they're just not profitable. I mean, they definitely don't get hit as often. They don't provide the reaction you want. And I studied them. This is a complete guide of exactly what order and breaker blocks are, and they're just not as useful as a fair value gap. So why would you use an order block over fair value gap? I don't know. I just proved it to you in live conditions of exactly when you find order blocks and how inconsistent they are. So without further ado, that's the end of the video. If you are an order block trader, maybe you have a different way to determine order blocks, and you can share it in the comments down below. But in reality, order blocks, maybe not a scam, but definitely will never be better than a fair value gap. See you guys in the next video.
Maybe I'm rich, maybe I'm wrecked, maybe I'm cursed, nah, maybe I'm blessed. Maybe I'm ghosted, maybe I'll get a text. Maybe I'm in last place, but maybe I'm next. Maybe I'm on top.